This is going to be an interesting video. In this video, I will share with you the Mark Minervini filter. Now, some of you, if you don't know who is Mark Minervini is a two-time US investing champion. I think he won the US investing champion in 1997 and then in 2021. And he has written a couple of books. One is Trade Like a Stock Market Wizard, and the second one is Think and Trade Like a Champion. Fantastic books. Okay, in both the books he talks about something called as the trend template. That template is something that he uses as an initial scan. He calls it as the qualifier. He uses it as a qualifier to to scan through the stock market, and then whatever companies come on his radar, then he digs deeper into those companies with earnings growth, sales growth, return on equity, base, and things like that. But the initial qualifier is very important. So I call this video the Mark Minervini filter for Indian stocks. So if you're trading the Indian stock market and you want to apply the same concept that Mark Minervini is using in the US, you want to apply this same concept into the Indian market, then this video might be helpful for you. Now, if you're not trading the US market, if you're trading some other market, some European market or Japanese or Hong Kong market, this video is going to be still helpful for you because the concepts remain the same. Because if you see Market Smith or Mark Minervini, what they have done basically is they have looked at more than 100 years of stock market history, and they have studied the characteristics of super performing stocks before they started their bull run. Okay. So if you take any super performance stock, uh, I would say a super performance stock is something that goes up triple digit in 1 year. Okay. That's a fantastic performance. Now, before that 100% return started, what were the characteristics that these growth stocks displaying? Those characteristics were studied. And based on the study of those characteristics, some filters were created. And Mark Minervini has been using these filters for almost 40 years now. So this is a proven, time tested, 4 decades old filter which you can start using. Now it gives you a lot of companies. Okay. So you have to use furthermore filters to sift through all the uh, data to find out those gems, because at any given point in time, how many companies can you manage in your portfolio? Maybe 5, maybe 10. Okay. So as you can see here, there are 5,033 companies in the Indian stock market right now. 5033 companies. Now you cannot do analysis of 5,033 companies every day. So you need a filter. So let's go through the Mark Minervini filter. So I click here. Just a second. Because the zoom is on, the filter might be slow. So let this thing open. And here I have already created a Mark Minervini filter for you, and I will show you those parameters. So let it open. See, I call this the Mark Minervini filter. The first criteria. Now in Mark Minervini filter, he is looking at the price. He is not looking at the market capitalization of the company. As an initial qualifier, he's not looking at the market capitalization of the company. He's not looking at the price of the stock. He is not looking at the dollar volume. He is not looking at the average daily volume. Okay. He's not looking at institutional demand. He is not looking at the industry ranking. He is only looking at price relative to their moving averages and their recent highs. So this is a very general filter because he doesn't want to miss out on stocks which could be potential candidates for super performance. Okay. So if you put too many criteria in your filters, you might miss out on some stocks. So that is why initially when he created this filter, maybe 3-4 decades back, he kept it very broad because he doesn't want to miss out on opportunities that show up in the market. Now, let us go through these filters. Number one, the relative strength, the relative price strength of the stock has to be more than or equal to 70. So this is the basic criteria that he uses. So let's say there is a stock which has a relative strength of 75. What does that mean? It simply means that that stock has done better than 75% of all the stocks in the Indian stock market based on a 52-week performance basis. Or in other words, the 52-week performance of this particular stock is better than 75% of all the stocks in the Indian stock market. So straight away, with this filter, you are dividing the entire stock market into two parts, the top 30% and the bottom 70% in terms of 52-week performance. So assuming there are 5,000 companies, so 30% of 5,000 is how much? So 1,500 companies. So straight away with this filter, we are only looking at the top 1,500 companies. All the bottom 3,500 companies are out. Okay, we are not even looking at them before even we go to the next filter. Now, in the trend template, Mark Minervini wants to look at stocks which are trending up, which means what? Price should be above the 50-day simple moving average. So these three filters ensure that the price is above the 50-day moving average. The price is not below the 50-day moving average. Also, the price should be above the 200-day simple moving average. So that is why I have selected these three filters. Basically, any percentage above the 50-day or 200-day is fine as long as the price is above the 50-day and the 200-day simple moving average. There is other criteria. I will show it to you on the chart. That will be very easy to understand. But currently, I am explaining to you the market Smith filter. Price versus 52-week high. So if this is the 52-week high, Mark Minervini wants the latest closing price of the stock to be within 25% distance from that 52-week high. If it is more than 25% below the 52-week high, that means the stock needs to do a lot of catching up. Okay, so that stock is out. So within 25% distance, if there is a stock, that is acceptable. Okay, again, 52-week low. If this is the 52-week low of the stock, he wants the current price to be at least 25% above the 52-week low. He doesn't want to buy stocks which are hitting new lows because those are stocks with problems. Okay, so very simple criteria. Here I have set it up as price above the 50-day, 200-day, price within 25% of 52-week high, price above the 52-week low, minimum 25%, and a relative strength of 70. So if you apply this filter, let us see what we get. Out of 5,000 stocks, how many stocks do we get in this filter? So let's see. I expect around 700 stocks at a minimum to come in this list. I have not checked, but let's see how many this shows up. Give it some time because I'm on a Zoom call. Yeah. See, 830 stocks. So you remember that relative strength filter? That relative strength filter alone was responsible to reject 3,500 stocks. And out of the 1,500 stocks, 830 were selected. That means 700 stocks were rejected because of the 52-week high and low and the moving averages. Okay. So this is your investable universe. And it's a considerable amount. Given that your target is to pick one or two stocks every day, so do you think it is going to be difficult to select one or two stocks every day to buy out of 830? I don't think so. Out of 830, you can easily find one or two stocks to buy every single day. I am talking about swing trading. I am not talking positional trading. As a positional trader, you have to be even more strict. As a positional trader, this 830 number should come down to 100 because you are going to put earnings growth, sales growth, return on equity, those kind of criteria because you want to ride the stock for a longer period of time. But for swing trading, 830 is a good number. Now, 830 is not something, 830, you cannot look at 830 charts in a single day. So what can you do? You have to probably add more filters to this. So for example, the minimum market capitalization of the company, minimum price of the company, minimum dollar volume of the company, minimum average daily volume in terms of the number of shares traded for the company. You might also want to add industry group strength here. You might also want to add the earnings strength rating here. Okay. So a lot of things you can add here, but this is the broad criteria. This is your investable radar. Okay. Doesn't mean that you go and buy these stocks. No, there are a lot other, there is more to think about when it comes to these stocks. Okay. Now let's go to the chart. Look at this chart. So price is above the 50-day simple moving average, which is the blue line. The blue line is above the 150-day moving average, which is the green line. And the green line is above the 200-day moving average, which is the red line. Okay. So price, blue, green, red. P, B, G, R. Remember this formula. P, B, G, R. Price, blue, green, red. Now you can use any colors that you want, but I'm just telling you the color combination that I use. P, B, G, R. If I see this combination, that's a stage two uptrending stock which meets the Minervini criteria. Okay. Provided, of course, the 52-week high and low and all those parameters are met, including the relative strength. Okay. Now, there are some nuances here that I want you to understand. This red line, which is the 200-day moving average, Mark Minervini says that this needs to be trending up for at least a month. So if we look at this, this is 12 September. So let's go to 12 August, somewhere here. So from 12 August to 12 September, as you can see, it has been trending up for at least a month. That's another criteria. What if the red line is trending down? Well, we don't want that. That's probably a downtrending stock. Okay. So there are some nuances here that you need to pay attention to. Another nuance is preferably all the three moving averages should be sloping up. That's a clear sign of an uptrending stock. See, when these start sloping up, the stock begins to go up. Correct? So, of course, the moving average indicator is a lagging indicator. It follows the price. It's not that the price follows the indicator. The indicator is something that follows the price. But our preferably we want the slope of all moving averages to be positive or sloping up. For the 200-day, which is the red line, the it should be sloping up or trending up for at least a month, preferably 4 to 5 months. Okay, that is what is given in his book, the trend template criteria. Yes, and relative strength should be more than or equal to 70. Price should be within 25% of the 52-week high. Price should be above at least 25% above the 52-week low. So that's the Mark Minervini criteria. It gives you 830 stocks. Now it is up to you how you choose to further bifurcate these stocks and find out the ones that are the best. Now, if we want to find out the ones that are the best, then you'll have to probably make it more strict. So instead of relative strength of 70, you might want to select stocks which have a relative strength of 90 or more. Okay. Or you might want to select stocks which are only in the top 40 industry groups. Okay. So that you can do by looking at some other filters which I have discussed on my YouTube channel, but I'm giving you the broad criteria. This is the most broad criteria that you can ever have. This covers the entire, I mean, whichever screens you use, okay, whichever screens you choose to use, whatever stock you find in that screen, that stock will be in this 800. Okay, provided, of course, your screens are logical enough where you are trading stocks which are at least having a relative strength of more than 70. Okay, at least equal to or more than 70. So as long as you do that, okay, that stock will always come in this 830. So this filter will never, you will never miss a good stock if you are using this filter. But the problem with this filter is you really have to, roll up your sleeves and start digging into that 830 number. Okay, that's a difficult task to do. You have to keep bifurcating that, splitting, sorting, looking at new ideas, looking at industry groups, which industry is growing, which industry is declining. So you reject all of them. So you keep further filtering. But this basic criteria, you don't mess around with this basic criteria. You can add more filters and create separate filters. So for example, I can keep this 830 constant. Okay. And then what I can do is I can create two separate filters. One filter is where the industry group is ranking is from 1 to 40. And another filter is where This criteria remains the same, but I add earning strength to that. So now those are two different filters, but both are derived from the Minervini criteria. That's the strategy I want you to use. See, it doesn't make sense to use just one filter, because if you're using one filter, okay, you're simplifying it too much. Because let's say your price strength criteria is 90 or more. See, that means that any stock which has got a price strength of 89 point something, you are going to miss that stock, right? So you don't want to do that, because 89 is also a good enough relative strength. Okay. So that's what I wanted to cover in this video. And as you can see, this is Keynes technology. I have been watching this stock for a very long time. Since this has been drifting down, I have not been buying the stock, but now it is showing strength. It is up 9% in a single day. So when it starts consolidating towards the right side, I might be interested in the stock, because this stock meets the Minervini criteria. Okay, showing extremely good strength on this particular day. Okay, maybe something positive happened with the company, maybe earnings, or I don't know. But so this is what I wanted to discuss with you. Going back to the criteria, relative strength more than or equal to 70, price within 52-week high 25 minus 25, 52-week low 25, price above the 50-day, price above the 200 days. Very simple. Okay, nothing complicated. So as you can see, it's very broad. So I hope this video was helpful to you. Please share this with your friends, family, and business associates. I have also discussed a lot of ideas in this video, which you can start applying. You can start putting more filters if you want to, but don't change this basic criteria. Okay. So please like, comment, and share this video, so that this video reaches those people who also want to become professional traders, professional stock traders, just like you. Thank you so much.